What's going on, all of my SoFi investors? Welcome back to the channel. SoFi looks very, very bullish today, only down a flat 1% or down 10 pennies, whichever way you want to look at that. SoFi is doing very well. Why do I say SoFi is doing very well, but we're still down 1%? Well, the S&P 500 is down 2%, the Nasdaq down 2.35%, Russell 2000 down 1.79%, and even the Dow Jones is down 1.74%. On top of that, stocks like Square, PayPal, other fintech stocks are down 5 to 10%, but SoFi holding a lot of strength. Why is that? Well, that's what I want to go over here in this video, and I hope you guys find value in it. We're also going to be going over everything else you guys need to know as far as SoFi is concerned, the big catalyst for this week, developments as far as Ukraine and Russia is concerned. So if you guys want to stay up to date with all of this information that will make you money, hit that subscribe button as well as like the video and get yourself some free stocks. Links down below in the description for Webull, Moomoo, and Public. If you guys want to support the channel, that is your way to do that. So first and foremost, just to reiterate yet again, SoFi is down about 13 pennies, 1.26%. We're not flushing under $10 per share. We are really finding a lot of support around $10 per share. So I do think a lot of the loss or a lot of the pain you guys are going to feel has already been felt. I think $10 per share is going to be that baseline level that we tend to stick around unless we do get a major market crash event. If something crazy happens, it's called a black swan, where the markets have not priced in, then you could fall substantially under 10. But unless we get one of those scenarios, I don't think that it's going to happen. Now, what would a black swan event be at this current stage? Well, it would be if Russia declared war on NATO. That would be a black swan. Is that likely? Probably not. They lose that battle 10 times out of 10 times, 10 out of 10. So I don't think that's even really a remote possibility. If a nuclear weapon was fired, that would be a black swan as well. Don't think that's going to happen, at least not anytime soon. And then on top of that, you could get the Fed, which if the Fed came out and emergency style raised rates, that would also be a black swan event. Other than that, I can't see any other black swan events. And it's kind of funny because a black swan event, it's something that you can't see coming. A black swan, you can't see it coming, right? But at the same time, there's really nothing it looks like that could be a black swan. We are already talking about cutting off all exports and imports to Russia as far as oil and other products are concerned. The House will be voting on that Tuesday. So if that happens, that's not really a black swan. It's kind of where we are already at. Oil would go crazy to the upside. The trades that I have been going over with you guys, like that BP call, is up quite substantially today. So that's why you want to subscribe to the channel to stay up to date with all of this information. But let's get into some of the specific SoFi information as well as the latest breaking news. So it says Ukrainian President Zelensky to address UK. That's going to be important. Whatever Zelensky says and whatever happens in Russia, Ukraine, that is going to dictate how the markets are going to react. We are reacting negatively today in the markets due to all of the negative headlines we got over the weekend, the humanitarian crisis that is unfolding. And look at that. According to the Ukrainian ground forces, the volunteers came from the US, UK, Sweden, Lithuania, Mexico, and India. And that's the first foreign fighters already joined International Legion, Ukraine's volunteer military force, and are fighting outside of Kyiv. So if this situation does develop even more, not going to be good. At the same time, everything in Russia, all companies, all debt, bonds, the like, is rated as CCC minus as of today. So what does CCC minus means? That means essentially it's no longer investment grade. That institutional investors can no longer buy Russian bonds. They can no longer buy Russian stocks. They can no longer buy anything Russian, pretty much. So you're definitely seeing a lot of money getting sucked down the drain because a lot of these hedge funds, institutions, and banks, they liked to own Russian treasuries, at least Russian treasuries for sure, because Russia has a very low debt to GDP, only about 15 to 18%, whereas America has a 140% debt to GDP, and something like Japan has 240% debt to GDP. So you're seeing a lot of liquidity that is starting to get sucked away, and that's probably a main reason why the markets are falling so much today. And anything that remotely has anything to do with SoFi is getting beaten down. And it says EU claims to cut dependence on Russian gas by almost 80% in 2022. So definitely looking at that ban coming here very shortly, and that is going to make oil, natural gas, all of that go crazy to the upside. And on Tuesday, if that happens, any oil trades that you have, any calls on oil, oil companies or oil in general, BNO or USO, is going to make a big move to the upside. But nonetheless, let's take a look at the margin debt. The margin debt for January was $829 billion. This is still about 100% higher than the crash of 2020 that we've seen. So there is a lot of margin debt out there. And to get rid of that margin debt, you have to cover on shorts. You have to sell stocks, or just outright put cash, cover on your margin debt using cash. But that's not usually what happens. So you are seeing a lot of margin, I would imagine, that is starting to go away. And that is also helping to drive down the markets. As far as why SoFi is actually doing better than a lot of the other more established fintechs, because one part of the economy, when the markets start to slow down and there's a lot of growth fears, like you can see, they're talking about potentially a recession. The European Union countries are definitely going to go into a recession. They're talking about America going into a recession. They're talking about Russia losing 35% of its GDP. So when you see growth scares like that, believe it or not, people tend to go into those high growth stocks, safer ones, something like SoFi, that is high growth and is on the safer side. SoFi, relatively safe. They do lose money, but it's not like you're shot in the dark penny stock, right? So surprisingly or not, depending on if you guys know this or not, but when growth fears ramp up, you actually tend to see investors look for stocks with more growth. So a little contrary to what you would normally expect, but that's probably why SoFi is holding up a lot better. SoFi did have good earnings as well, and we are right at this $10 support level. So a lot of demand comes in under $10 per share, and we are really fighting today to see which direction we are going to go. Hopefully, I do want to see a close above $10 per share, but I mean, I really don't care if we go up or down. If we go down, I would love to acquire a lot more shares of SoFi. Now, as far as the other data that you guys do need to know, SoFi specifics, the short interest of free float, 16.14%. Current shares that are sold short of 116.46 million. Cost borrow max of 3.94%. Utilization is still at 100%. So that is very bullish. Institutional investors that own SoFi shares, they're not lending out their stock for 4%. That does imply to me that we should see a bigger rally than 4% here in the short-term future. Days to cover at 3 days. So that is still very high and very hard for shorts to get out of their short positions when we do start to rally. Take a look at this. This is one of my favorite things I do like to bring to you guys. For the interesting flow sentiment for institutional investors, you are looking at 9 orders for the day, totaling $7.02 million. Positive order value of 88%. $5 call for $200,000 for 2024. A $20 call for January 2024, $75,000. A lot of firms selling puts, actually selling the $15 puts for April 14th. So that is also a very bullish directional trade right there. So a lot of bullish activity going on from institutional investors today, and I think that is a good gauge of how they are feeling about the stock. So as far as the actual technicals, and then we'll go ahead and wrap up this video because not too much else to actually go over. We will go over the max pain here just briefly. And if you guys are unaware of what the max pain is, it's essentially where the hedge funds and institutions will cause the most pain to option buyers, and they try to get the stock around that price by the expiration. So $10.50 per share is where the hedge funds and institutions would want to push the stock to get the max pain, get the most money for selling these options. $10.50 by this Friday. So pretty interesting. As well as that, be on the lookout for any headlines that are going to move the markets. Ukraine, Russia, that's the main situation. And as well as the big catalyst for this upcoming week, it is going to be CPI data that does come out. CPI year over year for February, core CPI month over month for February, as well as initial jobless claims. All three of these are high volatility expected data points that are going to be coming out, and that is on Thursday. That is on March 10th, and that is obviously going to move SoFi. If CPI comes in way higher than expected, you're going to see a lot more rate hikes priced into the investors' minds, right? They're going to say, hey, the Fed's going to have to raise 10 times or something super high. And then that hurts SoFi, because if rates go up too high, people pretty much stop lending altogether. You get pushed into a recession and all of that, which not good for SoFi. So we'll have to wait and see what happens on Thursday. Like I said, as far as the technicals are concerned, $10 per share is that support level. The RSI is at 38, so that is approaching that oversold territory. The MACD actually did just go bearish, but we're not in a clear directional bearish sentiment as far as right now. This gap has not widened, and it's really staying very narrow. So this suggests to me this could actually go either way. As far as the 13-day moving average and the 20-day moving average, those are at about $11 and $11.43 per share. So those are the levels we have to break out above if we do see a rally in the markets. If you hear the words ceasefire for not humanitarian assistance, if you just hear ceasefire, that they're done fighting for now over in Ukraine and Russia, that's going to cause a dramatic rally in the markets, and you're definitely going to see a lot of FOMO head into the markets upon that news. Don't know if it's going to come. Doesn't look very likely, but still it could come. As far as after that, if we do magically somehow break out above 1143, that 20-day simple moving average, the next level would be that 48 moving average, that pretty much 50-day moving average. That's at $12.47 cents per share, and then $14 per share. That is the main level that we have to break out above. I am very confident buying SoFi under $10 per share. I think that is easy money for the long term. So that is going to be all for this video. Hit that like button, subscribe to the channel if you guys have not already, and get yourself free stocks. Links down below in the description. Thank you guys for tuning in, and I will see you in the next one.